Ottawa has delivered a spring economic update that contains changes that could matter for both families and business owners, from easing access to the disability tax credit to incentives for passing your business to employees and plans for other previously announced measures. There's a lot to unpack. Joining us now to unpack it is Sébastien Desmarais with TD Wealth. Sébastien, great to have you with us. Let's dig in. Let's start with the disability tax credit. One of the headline changes here. What did the government actually change?
So the government yesterday proposes 3 changes to the disability tax credit. We can understand the disability tax credit provides tax relief to Canadians with disabilities and their supporting families. And it is important, if you qualify for the disability tax credit, you are actually entitled to access specific government benefits and support. So it is quite attractive if you can qualify. The problem is the application process is very burdensome to Canadians and their families. The government proposes to change some of the application process. So first, the government proposed to streamline the application process for Canadians who have been diagnosed with long-lasting medical conditions, such as Alzheimer's and severe Parkinson's disease. They're not changing the criteria for eligibility, but if you qualify with one of those medical conditions, they will streamline the process for those individuals. That's welcome news to Canadians and especially to their family. The second change is they are broadening the medical practitioners who can certify the eligibility for the disability tax credit. Starting in 2027, you will have physiotherapists, speech-language pathologists, occupational therapists who are practicing in that field of expertise to now be able to certify their patients' eligibility to the disability tax credit. So that will speed up the process for some. And the third change, the government will recognize provincial and territorial public guardians and trustees as qualified to apply for the disability tax credit for the Canadians who they are caring for. 3 changes that I think will be welcome news by many.
All right, important changes there, and you broke them down nicely. There's also a reduction in the CPP contribution rates for employees and employees. Walk me through those changes.
Yeah, so the government proposes to reduce the CPP contribution rate from 9.9% to 9.5%. What does it really mean concretely to Canadians? Well, if you're an employee earning $70,000 of income, this reduction on the CPP contribution rate will translate into $133 of savings. And for the employer, it will be a matching saving as well. So anytime nowadays we can save a bit of money, it will be welcome news by many.
Okay, so that change there saves some money on both sides of the ledger. Here's one that's very interesting. The government's also looking to make the $10 million employee ownership trust exemption permanent. Tax break was first introduced, I think, by the federal government back in 2024. It becomes permanent. Who does this actually apply to?
Good question. Essentially, the employee ownership trust is a form of ownership by a trust that owns shares of a business for all of their employees. So it's a fairly new concept in Canada. What the government did is if a business owner sells their business to an employee ownership trust, the business owner can now have the first $10 million tax exempt, so capital gain tax exempt. So it will be interesting to see how we can take advantage of this capital gain exemption. It is a fairly new concept, the employee ownership trust. So we'll have to wait and see if there's any traction for this exemption. But now the government confirmed this one is a permanent exemption.
Okay, an important change there as well. Also a change that may interest a lot of perhaps younger Canadians, a timing change to the home buyers plan starting in 2026. What should first-time home buyers know about this?
If you're a first-time home buyer or looking to be a first-time home buyer, you got to appreciate the home buyer's plan allows you to withdraw up to $60,000 from your RSP to be used for the purchase of your first home or build the first home. However, you have to put that money back into your RSP over a period of 15 years. What the government is proposing is that they will provide you a 5-year grace period before having to contribute the money back to your RSPs. So that was a measure that was introduced in the past. It lapsed in December 2025. So what the government is doing is they're saying we're going to extend that grace period to Canadians, the 5-year period. So if you're a Canadian, you're withdrawing $60,000 of your RSP in 2026. You only have to start contributing back to your RSPs that money starting in 2032, 5 years after 2026.
All right, very interesting change. Some of the new things that came out in the update, we did see the government confirming its plans that we found out before with some of the tax measures. I'll round those up for us.
Yeah, so the government also confirms that some of the tax measures that they had initially announced in the past budget is moving forward. Just to list a few, crypto asset reporting is one that they've listed. For business owner, if you have a tax deferral through a tiered corporate structure, that one is moving forward. If you have a trust, the 21-year rules, they've narrowed down the application, the technical application. They're moving forward with those. So in other words, if you're a business owner, pay key attention to the previously announced measures because the government is indicating that it's moving forward on those as well.